Trades and welcome back yet again to another one. I don't know what time it is. It's time for some heat. Get straight into it. Let's go. Today we're on the charts today. I'm going to be explaining to you guys what liquidity is, and basically I'm going to be explaining it to you as if you were a toddler, so it can be the easiest concept you understand. So without further ado, let's get straight into it. Best way to think of liquidity is putting gas in your car. Price has to stop at a point for it to get the momentum to push higher or lower. Meaning, in this example right here, price would need to either break into this fair value gap and rally higher, because this is what we call internal rest and liquidity, is when you have liquidity inside of the swing high, swing low of the range, and you need, like I said, that momentum to keep going, to push the trend. Now, if we were having a liquidity sweep and not a liquidity run, because what I just explained to y'all, which is my apologies, is a liquidity run. What a liquidity sweep is if you see price break through, have it change your character, and instead of rallying higher, we have a new bearish fair value gap formed, and we see price tap into it and target all these resting liquidity. So now, to explain to you guys where liquidity is, I'm going to put my lines and then I'm going to show you guys the chart. So the liquidity that we just swept in this scenario was here, here, and here. If you don't know what I mean, I urge you to go watch another YouTube video, because this is beginner friendly, but this is also for those who kind of have a grasp of what's actually going on. So to actually put this in perspective and throw us in the charts, you can find liquidity sweeps almost anywhere in any market. I know the chart says GBP USD, which is a forex market pair, but I personally trade futures. But I'm showing you guys this to show and prove that you can literally find liquidity sweeps anywhere. So, for example, here, bang, we have liquidity here, and liquidity, let's just put here, right? And just to show you guys, so you're not really confused, because I'd be the same way, I'm going to put my path back on there so you can see how I was drawing it and how it makes sense. So we have the market that pushes up higher, we got higher highs, right? And with that, we have fair value gaps. Let's just put random fair value gaps to match our lines, okay? Boom, 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 boom. Right? And what does price do with these fair value gaps? We have to retrace in to push higher. We retrace in, push higher. Retrace in, push higher. So I know you may be wondering, where's the liquidity sweep? Well, if we delete these fair value gaps for a second, and if we draw sell side liquidity, because I didn't show you guys sell side liquidity, I only showed you guys buy side liquidity, which is targeting sell stops, basically. That is targeting sell stops. Buy side liquidity targets sell stops. Sell side liquidity targets buy stops. Anyways, so for example, I'm going to delete this buy side liquidity just off the fact that I'm giving you guys a bullish liquidity example. So for this example, we need to mark out our sell side liquidity. And basically we just see what prices do every time we sweep the previous high, where market wanted orders to be filled. You see we get a sweep, and I'm gonna redraw the arrow so you understand the game. You see the sweep, and then you see the retrace, sweep of the high, retrace, sweep of the high, retrace. And basically, I don't want to confuse you guys as much as I know I probably already have. Liquidity is just sweeping the opposing side orders. If I couldn't explain that no other simpler form or term, you're putting gas in your car and you're driving to the opposing side's liquidity. To give you guys one more example before I let you guys go, because I know I kind of was all over the place, and this is not going to be edited, so this is probably going to be one of my longest videos on this channel by far so far. To give you guys sell side liquidity, for example, we had all this. We have all this sell side liquidity that's needing to get hit, and price really does a great job of, on the sell side, being aggressive, coming back down to it, considering the fact that we never hit the price range. Earlier market structure over here, if we couldn't see what happened over here and just saw this, price never came back down and tapped into this lower side liquidity that could have used for it to push up higher, which it just only took out the first presented side of liquidity and rallied higher. Price made a very aggressive move down into these other ranges of liquidity because, like I said, price needs liquidity as gas in the car to move. So, as you can see, price swept a low, created that fair value gap. Created that fair value gap. And what did price do? What did price do? If I can draw you a path like this, you'll tell me market is overall in a downtrend with a liquidity sweep here. This is the perfect way I can present a sell side liquidity to the best of my abilities. If you have a clear downtrend and market is clearly making lower lows, and you have a liquidity sweep right here, where prices break past previous high, and you see it reject heavy, liquidity sweep. AKA, price is making a clear downtrend. We break past the levels of liquidity, creating a fair value gap. And what does price do? We retrace, and then we're done. That's gonna wrap it up for this video. If I kind of confused you, or if it was some things that I forgot, please leave it down below in the comment section. You know, it's your buddy TK Already Trades. Don't forget to like, comment, subscribe, and yeah, catch you on the next one.